Today we're going to take a look at the Market Anomalies EA by Mr. Jimmy Peter Erickson. So Jimmy is currently at the top of the MQL5 marketplace with his prop firm gold EA. I previously made a review on that EA and I found it really interesting because he was putting in place like a real time-based strategy focused on multiple different trades and kind of looking for patterns in the day-to-day volatility of the asset. And this bot is kind of a similar approach where he's making a strategy based on kind of time-based intra-session patterns. However, now he's applying it to the USD yen. And I'm pretty curious to dive into this one to see how it works, what the strategy is, and effectively if it's perhaps a good addition to a portfolio. Because honestly, particularly with yen pairs and all things kind of Japan-based, there is actually some really interesting intra-session trends. And this makes total sense, right? Because if you're trading something which is USDJPY, obviously in the Japanese session, the Tokyo session, you're going to see quite a bit of trading being done or be impacted by the major Tokyo market activity. At the same time, like the yen and the Nikkei tend to be inversely correlated. Therefore, if major things are happening in the Nikkei, which would make sense during like the Japanese awake hours, this will then typically impact the yen. And that's how we see like during the initial start of the Tokyo session, we can have some pretty major volatility in the yen pairs. But then conversely, because this is a dollar denominated asset, as soon as we kind of migrate over to more of the New York session, we can also have some major moves because now all of a sudden the dollar is moving. And effectively based on kind of how the day and the news events of the day shake out, you can have very different patterns which take place between the Tokyo session and the New York session. And that creates some interesting opportunities that you can do, and you can develop strategies around essentially the changement of the trend between sessions. And I think that's what he's doing here. So it's a time-based system and there are some breakouts being involved, but it's not necessarily like a classic opening range breakout, which is you wait for the market open, you place a caller, you place one pending order, two pending orders, you trade a break, which is one of my favorite types of strategies. It's more like looking for kind of almost cycles between market sessions. And that's very valid and it's a very interesting strategy. So what I like about Jimmy is that he kind of brings a different style of system to the MQL5 marketplace. There's only so many ways that you can make a trading bot. And it's always cool when you find somebody who's maybe bringing something a bit unique because it's just not quite what we're used to seeing. So yeah, it's neat and looking forward to diving into it in more detail. So some of the other features besides just what I mentioned is that there is a drawdown protector and a randomization feature, making this prop firm appropriate. At the same time, there are some different parameters here to control the risk, which is always very helpful because you want to be able to cap your own drawdown and pretty much adjust risk based on your own preferences. With me personally, I usually run quite a few bots in a portfolio setting with lower risk. I find that works super well, and the fact that he gives you a few different ways to play with that and to control the risk is very helpful. And we can see here is he's been very successful on DarwinX and running a whole basket of different portfolios, and he's had good results to date. And what I've heard is he's a lovely guy. He wrote me an email as well after the first video. He told me that this bot was released, and I've only heard good things about him as a guy and as a developer as well, so that's usually a good sign. So now jumping into the actual signal, we can see that it's reasonably new, but there are quite a few trades here, and it's on IC markets. Let's look at the statistics briefly. We can see that it actually does have a positive risk reward with a 65% win rate. So far so good. Obviously over time, most likely if you maintain the positive risk reward, the win rate will probably come down just because if you do 10,000 trades, having a positive risk reward and upward of 50% win rate is just hard to get. If you actually this isn't quite a 2-to-1, but if you have a 2-to-1 on average, anything over 50 is phenomenal. So if you have 50 and a 2-to-1, that's already a 45% win rate and a 2-to-1 risk reward, you are printing cash over enough trades, right? So here, it's a fairly small sample size, so we're seeing outstanding statistics, but nothing fishy because there's not that many trades. So either the risk reward is going to go down or the win rate is going to go down over enough trades, just because if this were to continue, it would be ridiculous. But over a small sample size, it can certainly happen. So yeah, so far looking really good here. Signals looking solid. It's a nice mix of winners and losers. And I think it's probably based on a similar kind of similar premise as the prop firm gold EA. Now, if we actually go here into Vantage, where I've taken the liberty of running a quick back test, we can see that it is indeed trading kind of intra-session volatility. And it's actually holding positions for a fair amount of time. Like if we look at some of these targets here, like that's like 0.3% moves on the yen is pretty significant. And essentially he's opening kind of with the direction of the prevailing trend. Sometimes he's stacking multiple positions on top of each other and kind of trading like he's essentially waiting for the session to trend in a certain way and then enter at that time. And unlike prop firm gold, if you analyze it, he almost always was entering long, and then he had a second stop and reverse trade at the stop loss of the first trade. So if the first trade stopped out, he would often go short. Here, I'm not seeing that. Here I'm seeing he's actually entering multiple trades at the start of the session, and those trades are usually long, or they're mostly long from what I can see. And then if some of them actually do have a stop and reverse function as well. Interesting. Okay, so he's kind of like pyramiding trades. And sometimes he's even opening 3 trades. Like if we look at the actual deals here, we can see sometimes he's, 2 ins, in, out, in. So he almost has like a pyramiding system where I imagine if some of them go more into profit, he kind of follows up and opens more and more. But there's no lot scaling or martingale here. He does occasionally have some smaller ones, but there's no like massive lot scaling. So quite interesting. If we look at the initial trade here, let's just check the time. I venture it's probably at the beginning of the session. 6 o'clock. So that would be like pretty much I think this is Tokyo. This would be Tokyo's second session. So if you look at the stock exchange in Japan, Tokyo has a morning session and an afternoon session. So I guess that's most likely why he's choosing some of these times. He's trading essentially at the end of the Tokyo morning session. Yeah, here we go. So after the lunch break in Japan, he's deciding to enter. So it all makes sense to me. Like the actual technical strategy, we'd have to really do a deep dive to see specifically how it's working. But essentially, he's opening multiple positions at the kind of open of the afternoon Tokyo session. I believe he is optimizing the times as well. And then he is pyramiding, so he's entering more positions depending on most likely if he's actually entering profit or not. But there is most certainly a real strategy here. If we look at the equity curve, like it's nothing ridiculous, like it's very profitable, but there are natural drawdowns. Overall looks really interesting, like a bit of a unique strategy, nothing kind of too insane in terms of like unrealistic results, but there's certainly a real strategy there. It's an interesting, probably very uncorrelated strategy to most others because it's trading like a intra-session movement type system, which is just not that common. And it's almost purely price action and time-based too, which makes it much less likely to be overfit unless he massively over-optimized the times. But as long as he chose the times for a logical reason, like the start of the Japanese afternoon session, it should be a very nice, robust system. So guys, I think this is, especially at $99, you probably can't go too wrong with it. You can frankly make that in one trade. So I think it should be a really interesting one to check out. So guys, hope you enjoyed my video. I'll see you in the next one.